All right, traders. Damon here. I'm wanting to run through my day today. Start out a little bit undisciplined, and sometimes when you do that, you end up on a very slippery slope where you can tip one way or the other. My second trade was not a total neglect of my trade plan, but I was fishing for more than the chart was telling me, and I paid a price. And then I was really upset because I let myself be handled by price, and then I felt I was outside of my trade plan. I had some discipline issues. I also had someone here that was talking to me, so I was a little distracted. But that's no excuse. I'm a professional, and I need to be accountable for my actions. I slapped myself with my trade plan, and then I got on the right track, and I was able to achieve a break-even day. As you can see here, I only made $20, but I was able to come back and get back on my plan. And sometimes it's extremely important to understand where you are stepping outside, that not to allow that to become a problem for the rest of your trading session. Sometimes it is. Sometimes we're just undisciplined no matter what we do or try, or sometimes we don't even realize it till the end. You're like, why did I lose all this money today? Well, when you go back to your session, you realize you were not on your trade plan. You were completely undisciplined. So I had some issues with that today, and I wanted to go to the chart and explain each trade in detail so you can understand how sometimes you can see or what you want to see and not what's really there. Okay, so let's take away the chart trader so we can have a little more room. And I came to the chart this morning, and I knew yesterday that the bulls had their swings numbered. They produced this 100-point move up, and then sure enough, the sellers were able to come in and produce an extended one-to-one move. This told me, one, that the sellers were serious, and that two, we should probably expect more price action to the downside, as extended moves on the second leg is an indication of building strength and price acceleration. Okay, so once we achieve that, then I looked at the candles and I see an overwhelming number of huge volume candles to the downside. What does this mean to us from an accumulation distribution standpoint? It means that we're accumulating orders on the selling side, and the buyers are trying very hard to consume, but there's just everything that they throw on the market just gets completely consumed back to the downside. Okay, so I understood off the bat that when I got to the market here and I got to my chart, that we price action was favoring to the downside, and although we made a short-term new structure high here, it was a complex correction of this bigger move, and with the expectation of price will move lower. So the market opened somewhere in this area. The market did produce that new structure low that I anticipated, and right off the bat that confirmed to me that not only was I correct about imbalance favoring the bears, but I also need to look for a trade to the downside. Okay, so I expected off of the week projection here a deep correction. Okay, so when I drew my ratio here and I looked across at the structure, this was the area that I was mainly interested in for that short. This is around the time where my visitor came and we were talking, so I missed that, and I missed this entry on the count, and I went to the restroom. Okay, so price tested this area here. So when I got the third opportunity, I didn't like these two candles necessarily. However, the rotation was good where I expected it, so I entered the trade because I had a clear expectation, and I knew, listen to what I'm saying, I knew that imbalance should favor the bears. Okay, so I got in here, okay, with the expectation to get short. Okay, price moved in favor initially, stumbled in this area, right, area of support. So I felt the need to protect myself as the bears were having difficulty coming down. Okay, broke rule number one of my rules. Okay, my trade management rules: get to a break even at the tested structure. At the tested structure is this. This is the swing, the correction. This is the main swing that I was trading. This is structure, not this. But price had bought very nicely off of this area, and tried to make new highs overall. So I felt the need to protect my trade in light that I did see some bullishness here in these last two candles. Okay, so I protected early against my trade plan, and boom, I was stopped out only to see price achieve what would have been a 49-point winner, because price produced a very nice and very efficient one-to-one move to the downside. Okay, so I would have been able to take profit. But not only did not happen, I then saw this, and I saw what I wanted to see. I saw a very weak, very ragged move to the downside with very deep short-term corrections, immediate order flow situation that was telling me this looks more like a correction, not like a move to the downside. At that point, I went completely off of my trade plan and the expectation of the new structure low, the imbalance, and all that stuff. And when I see price make a weak correction and all of a sudden produce projection in the short term, that should have unscrewed my mind. But instead, I got a rotation in an area of structure and I chased it like a moron, looking for the long, seeing that in the short term I made a short-term new structure high. Maybe this market is trying to get higher. So completely neglected my solid analysis off of the order flow that was dominating the chart to chase something from an immediate standpoint that was against the immediate expectation as well. Okay, so double idiot, and I took this trade and it never even went in favor. It just very quickly stopped me out. Okay, I then got really pissed when I saw the one-to-one completion being stopped out, and then that's the slippery slope that we're on. That's where Pandora's box opens up, and if you let those emotions come in, it'll completely ruin the rest of your trading session and cause you to extend into further drawdown. So I immediately realized this. I stopped. Okay, got up, went a glass of water, grabbed my trade plan, smacked myself with it. Literally, I mean it. I do it all the time. And then I realigned myself with the expectation. It's okay, one-to-one move. I expect a correction. However, imbalance should still favor the bears. Okay, I don't expect much out of this. I need to see how price comes up. Okay, because my expectation at the very least is what? We had a symmetrical pattern completion. I would expect price to get to this area. Okay, but I need to see how price climbs. The structure in this area is extremely good. Okay, whole morning we've been struggling to get past it. Okay, and here price spoke to us. So once price got down, okay, I expected price to come up. Now I wasn't initially happy with the volume here. Remember, it was a pattern completion, kind of like the video you just saw. Okay, however, I did see an engagement by the bears to come in early. Okay, and they were fought off and they came up here into the area of structure. And when I saw this gray rotation candle, that meant something for me. I also told at the time I was trading with my trading partner that I understand that I'm getting in earlier. My trading partner is one of my students, but I can't pass this up. This is solid, and I was prepared to enter again at the 618 on the complex possible correction here. Okay, but imbalance should still favor the bears. We had a increase in projection to the downside. I don't expect much out of this, but I do see the volume here. But had this rotation been weaker, I probably would have been a little more patient, but it was really nice, so I took it. And I got very aggressive down here because this is an area that was bought into. It was also a completion of a larger ABCD pattern that also completed symmetrically in the area. So because of that, down here, as you can see, I felt the need to get aggressive and trail aggressively, and it turned out to be the right decision. Price did rotate there in the immediate structure and try to come down, but it just corrected, and I would have been taken out at a break even had I not done that. So the aggressiveness played off there, just because we have a longer term order flow pattern completion and shorter term pattern completion. We just have a lot of confluence here for price to go ahead and at least try to correct somewhat. So we didn't have great distance, but I felt the need to strangle my trade, and I did. Okay, so by that point, price was over here, and I decided at this time to leave. I was contemplating getting in here. The expectation was for a deep correction and price to come in this area, I was preferring a trade deeper to retest this area because of the longer term pattern. Price never got there, and I wasn't here to trade this. But as we can see, this is where we have those situations. Now, I think this is the area, somewhere in the area where Argan, our friend, took the trade long, and he got stopped out, and price had two very good rotation candles that he pointed out. Now, what were the issues with this trade? Yes, you do have the pattern completion. Yes, you do have two packs. In fact, you had two pattern completions in this general zone. Okay, but what's happening here is that you have good volume, good projection. You have great volume on the bear side. We do not have. We have good volume coming down, weak volume coming up, good volume coming down. Although you had good volume here, you just didn't have enough from a consumption standpoint. Plus, the bears were able to just accumulate further and just produce very strong volume to the downside. When you see good volume like this heading into pattern completions, don't expect too much from a correction standpoint. In fact, you should expect the opposite. Expect price to really not do much from a correction standpoint. It may fart around and cause complex corrections, but the expectation is nothing more for price to continue to work lower. Okay, so then you have here this pattern extending the clear swing. Okay, clear swings forward. You also have here from an immediate, you have here price came down, came up, corrected. So you have you also have this situation here. That's a clear swing, projecting it to the downside. You have confluence here. Okay, without a doubt you have confluence. But look at the volume. Look at the order flow heading down into this area. Okay, you have breakdown in price, true. You have deep corrections, true. But what does the volume stand for or look like? Who's accumulating over who? Who's consuming and who's accumulating? The bears have been nothing but continue to accumulate orders here. So any move to the upside is going to be problematic for the bulls. And look, every attempt to come up was met with aggressive volume to consume. So this was just a Hail Mary pass and the inevitable move back to the downside. Okay, so we have this projecting it forward gives you the very nice. But again, look at the volume, look at price coming down. Okay, so what's happening? There's no accumulation, there's no consumption. So how can price possibly climb with that situation? It just can't, and price comes down and comes down and comes down. Okay, and it comes back into this general area here. So every time price tries to come up, the bears are just very aggressively being able to obliterate any attempt to correct here. Okay, and that's the point. Okay, when the market is strengthening like this, when there's strong volume to the downside or to the upside, you don't necessarily want to trade the pattern completions. Okay, because you're going to end up with if you do get a good price entry, you're going to end up with a bunch of break evens because price is barely going to get to the 38% of the pattern. Okay, and you're going to be frustrated as all hell. You're better off understanding where the strength of the market is, who's accumulating over who, and align yourself with the proper correction into the proper area of structure to allow yourself the opportunity to get short again. Okay, so in this particular situation, you had that from a rhythmic standpoint. Okay, you had that here. Okay, you didn't have it here, but you came back to what? An immediate area of structure. Price continues to gain strength. Price continues to accelerate. Price continues to extend. Extension projection is increasing over here. So now we're aligning ourselves with strength. Shallow pullback into an area of structure. Boom, rotation. Now risk reward wise here sucked. I probably wouldn't have taken this trade. And hindsight's 2020. But you get the basic idea of understanding that just trading anything from a completion standpoint here is going against the strength of the market. It's going against the expectation that this pattern is one that is likely going to work out. Why? Because you're trading against the strength of the order flow. Okay, that dictates where this market's going. In this particular situation, okay, you need to put those patterns secondary and say, okay, this is a possibility, but there's so much strength here that this pattern is just not one worth trading, and I'm better off taking the expectation of a complex correction at best of the immediate dominant swing, the immediate swing, main swing here. Okay, not the patterns 618, but the immediate. Okay, and in this particular case, you got it. It was achieved here. Okay, but you needed to understand that that was your profit target off of this situation, not that we were going to get a reversal back up to the upside. Accumulation was against you, order flow was against you, and everything else was against you. Okay. Sorry I wasn't live on my chart to be able to help you out with that. I was out and about, as I usually am in the afternoons. But that's a situation. I just hope that it has value to you. I hope that you guys can see this and understand the value of staying on task when you make your analysis for the beginning. Don't let the micro or the short-term order flow push you into a bad trade. When you have a clear expectation, follow your rules. Getting to a break even early stops you out most of the time. I always tell you guys that trades need room. Give your trades room. Give the expectation a chance to play out. Don't strangle your trade. That's exactly what I did here, and I paid the price, and then I let myself be bullied into a trade here, which I also tell you guys not to do. But once I got myself lined up, as you can see, one good entry erased two stupid dumb mistakes, and then it was time for me to go, and I couldn't capitalize on the remainder of the day, which would have been extremely nice, because I would have had 40 something points here. I would have had another 20 something points here, and not really sure about this. In hindsight, yes. In real time, I was expecting something a little deeper. Wanted to see something a little deeper, so I probably wouldn't have participated in this in real time. Okay, but that's the situation. That's where my trading went today. I wanted to be completely transparent with you guys and show you guys how sometimes we can fall off of our trade plan by seeing what we want to see, not what's there, because I pointed out what was there, but then I saw what I wanted to see. Maybe due to a little bit of the destruction of the friend of mine that came over, and also a little bit of tunnel vision, seeing what I wanted to see. So that's it. That's all I have. I hope this video again has value, and I'll see you guys on March 8th for the live training session, and I'll see you guys also on the battlefield tomorrow. Thank you very much.